Hi, everyone, and welcome to today's webinar, Gold and Silver 101. I'm Machi Block, Senior Director at American Hartford Gold, the nation's largest precious metals dealer, trusted by countless Americans to protect their retirement savings with physical, tangible gold and silver. I appreciate you joining me today, and I want to give you all a chance to kind of get settled in, just let a few more people join here. We're getting started on time, and while we wait, would you just write a comment? Let me know where you're watching from and whether you've bought gold and silver in the past or whether this is your first time. And also let me know what brings you here today. Is there something that you're seeing in the economy that really has you concerned and looking at precious metals? And is there something specific that you're hoping to learn today and that we're going to cover? As you leave those comments, it really just gives us a sense on how to fine tune these moving forward. It's good for us to see what your concerns are, what your interests are. We want to make sure that we're really addressing what's important to you. So again, thank you guys for being here. It's great to have you. Again, I am Machi Block, Senior Director at American Hartford Gold. And today I'm really excited to take you through the essentials of owning physical precious metals and why they're really a cornerstone of a strong financial strategy. And then furthermore, why they're so crucial in this current economy that we're going through. Now, it's no doubt that economic uncertainty and volatility seem to be everywhere we look, right? The stock market is up and down day after day. The dollar is in decline. The world seems to be pulling away from the US dollar as the world reserve currency, and a stagflation recession is on the horizon. In our opinion, it's more important now than ever before to understand how gold and silver can serve as your financial safety net. So whether you're a seasoned investor, you're just beginning your journey, our goal here today is really to provide you with clear, actionable insights on how to secure your investments with gold and silver. And we're going to cover some of the economic conditions, how gold and silver fit into a well-rounded, diversified portfolio, and of course, how to help you get started easily and confidently, which is the most important thing. And if you do stick with me until the end here, I'm going to share with you how you can qualify for up to $15,000 of free silver with your first order. That's really our way of saying thank you for taking that first step towards securing your financial future. So it looks like we are getting some good filter in here. Edwin from Charlotte, thanks for being here. New client. Richard from San Diego. Mary, looking for a super safe place to put my retirement savings. It's exactly why we're all here, and I hope to really show you how gold and silver are going to serve that for you. John from Delaware, Rodney, Krista, Terry and Krista from Kansas City, and Jean. So yeah, it looks like first time for a lot of you here. And with all of our clients, really who we're dealing with day to day, it's a first time for many people to be looking at gold and silver. We just typically don't have to think about precious metals except for once every decade when the economy really starts to shake up. And so our job at American Hartford is to give you a full education and help you understand how precious metals can give you the hedge that you're looking for, but also try to get you a sense of what we're walking into with the economy and make that a little bit more simple for us to see the forest through the trees. So really great to have you all with us today. Look, as we go into the summer, all eyes have been on the stock market, right? This year started out incredibly volatile with the stock market, the stock market dropping 20 to 25% and entering into bear market territory. Now, as of right now, we've really had this nice relief rally. It's brought us back almost to even, and investors are really wondering what does come next. We certainly seem to be on this great roller coaster ride right now, but the credit rating agency Moody has officially downgraded the U.S. debt to AA1. We lost our last AAA rating, and that just happened over the last month. The dollar is weakening. We're down 9% so far this year, and the bond market has shown significant weakness and danger as investors, at least for now, seem to have lost all confidence in the U.S. system and U.S. assets. Major countries, institutions, and of course investors are beginning to sell their bonds and sell out of U.S. stocks as well. And that seems like a trend that's going to be set throughout this year. Instead of staying in the dollar when they sell the bonds and stocks, there's this major trend shift that money is beginning to move into precious metals instead of U.S. assets, instead of U.S. dollars. And with these recent developments, the US has officially lost our safe haven status, where bonds have traditionally been considered the safest asset class in the world. Smart money is now proving that gold and precious metals may be the only reliable safe haven left. Gold has risen nearly 30% so far this year. We're charting new all-time highs, and silver is following suit, up about 25%. And many analysts, economists, and investment banks are calling for gold to continue skyrocketing for the foreseeable future, given the current economic conditions. Now, US growth is beginning to slow. Unemployment is decidedly on the rise. And while we have some cooled off conditions with the Trump tariffs, it's really important to realize we're only in a pause right now. And all of that uncertainty that caused this mess at the start of the year is still on the table. We're right in the thick of that. So while stocks have really been a major indicator that many of us pay attention to because it's blatant in our face with our portfolios, there's really a variety of macroeconomics and markets that we need to pay attention to right now. And whether stocks go up or down, I want you to get this, that the real concern is not what the stock market does. That's not really what matters. But what actually matters is what is the dollar doing that underlies the stock market. That's where the real risk is to investors right now. We're facing an existential crisis with the dollar, unlike anything the US has seen before, and things are actually just getting heated up. So if the dollar is going down, everything that we're valued in with dollar-based assets is also losing value, regardless of what that individual investment is doing. And we need a hedge outside of dollar-based assets, and that's exactly where precious metals come into play for you. So it's incredibly important in times of uncertainty and economic volatility that investors like you and I begin to wake up to the madness and look for a more comfortable place to park our life savings and ride out that uncertainty. We need to heed the warning given by the economists, billionaire hedge fund managers, analysts, and investment banks and prepare for what's coming right now. And those alarm bells are ringing significantly louder. And that's what we're here to talk about today, is what are they warning about? What's actually going on in the economy? And how can we look to precious metals for that safety? So a few points that I'm going to cover with you: the stock market, the bond market, this is the big one, government deficit and debt, and Trump's one big beautiful bill, how that plays into it, the devaluation of the dollar that's taking place, of course, geopolitical and domestic political uncertainty, the outlook for gold and silver, and then how you can invest into precious metals to protect your investments. So at any point in time during this webinar, if you want to chat directly with our team, we have account executives on standby. You can call the number that's on the screen, which is 866-607-2447, and you can have a more in-depth, specific conversation with those account executives that, again, are standing by ready to help you. As we go through this, leave your questions in the message board. We have some moderators that are kind of helping to feed me the questions or the concerns that you guys have. If you have a very specific or direct question, you may get pulled into a side room where they can answer that with you one-on-one and just get into the meat of it. But again, at any point in time as we go through this webinar, if you just want to jump off and talk directly with our team, I'd recommend you do that. You can always get a replay of this webinar. We really want you just engaging and talking with us about what your concerns are. So you can skip all this, get right to it if you want to call that number. But I do appreciate you having you with me. And then the last thing that I want to say here before we really get into it is, of course, this is not financial advice. Do your own research. I'm just here to give you a sense of what's happening in the economy and the markets, help you make some sense of it, and show you why gold and silver might be the absolute best place you can put your money at a time like this. But that decision has to be up to you. Okay? So let's see here. Is silver a better buy now? James, sorry for being late. Good morning. Good morning, James. Look, Benjamin, I'm going to get into what is going on with silver and gold. That's going to be kind of the meat and potatoes of this. So if you bear with me, we'll dive right into that. All right, look, the economy as a whole, we're beginning to see slowing growth in the US right now. Inflation is actually expected to be back on the rise this year. In fact, BlackRock has inflation predicted to hit 7% by this summer. Now, with inflation rising and the economy slowing, economists are really fearing that the U.S. is headed for a 1970-style stagflation recession which of course can be crippling to traditional investments. Inflation again is expected to peak back up in the third quarter, and interest rates are actually expected to remain steady until spring of 2026. The global economy as a whole is expected to see the slowest growth since COVID. Governments, of course, are going to be spending more to kind of increase that growth, and they're creating bigger deficits, which have major implications. The government debt here in the US is looming almost at $37 trillion. And try as we might, we're only spending more and more, and getting that budget under control really seems like a near impossibility. Ray Dalio, billionaire hedge fund manager, founder of the largest hedge fund in the world, says that the US government debt situation is now nearing the point of no return and approaching a death spiral that could threaten the stability of the world's largest economy. The current US deficit is on an unsustainable path, and it's more than just the markets can bear. Ray Dalio said to Bloomberg that he gives America 3 years, give or take a year, to avert an economic heart attack before the US is really in a critical situation that's unavoidable. Now, Jamie Dimon, the CEO of JP Morgan Chase, says that China isn't America's biggest threat. It's actually the enemy within, meaning our debt and our currency crisis. And he says that we should be very afraid of the bond market and the warnings that it's giving us, and that the bond market will crack. He also says that a recession is the most likely outcome for the US, and he's joined by many economists and investment banks that expect the US to enter into a stagflation economy this year. They're saying, from many economists right now, that there's a dire economic slowdown that's already begun, and that's exactly what we're walking into this year. So we want to pay attention to these things. So all of this is cause for investors to kind of wake up, shake off the cobwebs, and really start looking for a way to protect what they've been able to grow over the last decade, right? It's become incredibly important to think about diversifying and getting a hedge. As far as the stock market is concerned, we've had this major sell-off in April, right? It showed how weak the economy truly is. It brought the stock market down about 20 to 25% into bear market territory. Now, stocks have largely recovered right now from their April sell-off, but we have to wonder, is this good news or is this bad news? Are we resuming a steady, stable growth market, or are we actually just in a massive relief rally in the midst of a long downward trend? And keep in mind that we're still in the most overvalued S&P 500 that we've seen since 1929. And Warren Buffett is still sitting on $1/3 trillion of cash, and he's actually selling more right now. So he doesn't think the bottom is in the market yet. It's something we really want to pay attention to. And then, of course, economists across the board have not cooled down on their warnings of a massive crash coming, of a recession, and that stagflation that's up ahead. And analysts warn that there's still too much uncertainty around all of the US policy that's taking place right now. With the downgrade of our US credit and Treasury bond yields are spiking right now, there could easily be a tremendous flow of capital out of an overvalued and risky stock market into bonds at that higher yield, right? Stock market is usually where we look to in good times. When things start shaking up there and bond yields go up, investors look to bonds as a safe haven, and they want that higher yield. And just a small shift of that money and that capital flow out of stocks into bonds can cause a huge crash in an overvalued market. And we have seen in the past, when this has happened, drops of 50 to 60% are really not uncommon. So that's something that we really want to pay attention to, is these are the warnings that's going on. And it's important to realize that when we see tons of uncertainty in the markets, there's a major sell-off and then relief rallies, we actually don't know where things are headed. We don't know if we're in the clear or not. It's easy to let our emotions kind of cool off and feel like everything is fine again. But just like in 08, 09, it took 19 months from the top to the bottom as the market sold off. And there were plenty of relief rallies that gave investors this false confidence and false hope on the way down and kept them in that falling market. And so you really, if you think about it, if you were concerned 2 months ago and you feel fine now, you really might want to rethink your emotions and your positions and not let your calm emotions now trick you into potentially riding out a major market crash that could be coming. Many economists, again, are warning that catalyst was the very beginning drop in the market. That's the catalyst that popped the bubble, and that the real crash is really up ahead still. And again, I would tell you that a good litmus test, and I use this for myself, is if you felt the pain while the market was dropping and you wish that you would have diversified yourself and made a move out and positioned differently or acted quicker, then this rally that we have right now that's brought us almost to near even is really a good time to pay attention to your gut and act on diversification. Investor sentiment in US assets, which is stocks, treasuries, it's waning and faltering. We see that across the board. We saw this rush to the exit in April, and you got to realize it's going to take a lot of certainty to bring that money back in and resume any kind of significant market rally in stocks. Frank says, I have been a customer for 2.5 years now and have been very pleased with the service and responsiveness of Machi specifically. Thank you, Frank. I took physical possession of my metals and enjoy watching its increased value. You really got in at an amazing time in the market, but I would tell you we're just at the first or second inning. We have a lot more growth up ahead is what's expected. So great job, Frank, and we hope to help the rest of you make a similar decision and position here. So that's kind of the stock market and what we're seeing, right? A lot of concern, these relief rallies. Is the market going to go up? Is it going to go down? How do our guts really tell us we should be positioned in these times? Now, we've tariffed the entire world, right? We've really put tariffs everywhere, and we've had these starts and stops with really very little getting resolved. And the tariff war and the trade war is what caused all this uncertainty in the first place. We're still at the table talking with everyone. And remember that while we're at the table talking, that uncertainty is still present. As long as there's uncertainty, the markets are going to shake up. Markets traditionally hate uncertainty. Of course, gold and silver love that uncertainty. The Trump trade war has already done lasting damage to our global supply chain. Just like COVID did, there's going to be a reckoning that we have to deal with here. We really won't feel the effects of this until probably the end of 2025 or start of 2026. So even if things get cleared up on the trade wars and the talks, we're not out of the woods yet. And additionally, we thought we had a trade deal with China. We thought we had worked it out. We pressed pause, but those talks have completely fallen apart, and China fully violated their agreement with us. And so again, while there's uncertainty surrounding this reordering of global trade, the stock market should be responding very negatively to that uncertainty, and that's something that we need to keep in mind. And that's not the only uncertainty that we have right now, right? There's signs that Russia-Ukraine war is actually escalating. It's not stopping. The West has removed restrictions for long-range missiles to be fired into Russia. And then Russia and Ukraine are exchanging damaging blows back and forth. We still have Israel and Hamas that's continuing. Here at home, Trump's number one friend and ally, Elon Musk, just last week severed ties with him and completely did a 180. And he said that the Trump tariffs will create a recession by the second half of this year. And this is huge, right? That there's just so much uncertainty, and there's a lot of negativity surrounding what the one big beautiful bill that Trump is pushing. Musk called this a disaster in disguise that will bankrupt the country, and it's adding nearly $6 trillion of spending and deficits over the short term. So just when we think we have a good direction, there seems to be this shakeup that's happening on every angle. In addition to this, just this week, we have riots happening over ICE in LA that's prompting the government to have this really aggressive response. And it's very reminiscent of what we saw with the George Floyd riots. You know, we don't know where this is going to go, but any kind of volatility and violence and uncertainty for America is going to drive uncertainty into our markets for both domestic investors and foreign investors. And it especially hits hard on the confidence of foreign investors that are looking in. So that's something that we need to pay attention to as well. The dollar, guys, has had its weakest start to the year on record, and it's expected to fall much, much further. Investors around the world right now are rethinking their approach to the exposure they have with the US dollar. The dollar has seen a stunning unwind since the start of the year, and it's down about 9% year to date, with a lot further falling expected. Now, Morgan Stanley strategists are warning that the US dollar is expected to weaken significantly in the months ahead amidst slowing growth in the economy. And unless investors really see a dramatic change from the Trump administration, the dollar could be on the cusp of a more enduring bout of weakness, unlike anything that we've seen since the early 2000s. Now, realize that the value of a currency is going to oscillate consistently, largely based on the confidence in a country's economic growth, as well as fears around economic factors like inflation and policies implemented by governments and banks. One of the major reasons for the pullback that we're seeing right now is this loss of confidence in the stability of America with the trade war and tariffs, and then soaring deficits that we have. Trump's big, beautiful bill is actually likely to increase the US deficits by trillions of dollars, and again, add to $5 or $6 trillion to our national debt. And this combined really is making investors worried that maybe the US is not the safest place to be like it always was in the past, and that they should start looking elsewhere for their investing. Now, governments and investors alike are really looking into ways to become less economically reliant on the US, and that's a very telling thing. It's really a classic case of supply and demand, right? If you take into account all of these troubling indicators about the future of the US economy has led investors to sell bonds, causing the demand for the dollar to go down and pushing its value even lower relative to other countries. Now, as the world reserve currency, that loss in confidence is huge for us. The fear here is that a weaker US dollar is just one segment in a chain of causes and effects that could really lead to economic chaos here at home. And everybody is almost certain there's going to be a growing inflation happening. When that happens, the Fed usually has to raise interest rates higher, which creates a stagnated economic growth and recession. And that's why they're warning about stagflation coming. Now, keep in mind that we have $36 trillion of government debt right now. 9.3 trillion of that has to get refinanced this year at almost double the rate that it's currently at. That kind of effect can bankrupt the country. This is why we see Trump and Jerome Powell really going to war toe-to-toe on Trump wanting the Fed to cut rates. But if they do that, we're gambling with higher inflation. And so there's just this major mess that we're in right now. And then I want to get to the bond market with you because that's really the real story that we're dealing with here. And it's something that most people don't truly understand. And it's why Americans absolutely should be considering looking at gold and silver. But before I jump into that piece of it, I do just want to remind you, you can call us right now at 866-607-2447, and we can discuss all of this with you in more details and kind of a one-on-one conversation with you and get into the heart of your situation. So this economic news, if it's concerning for you, if you're kind of feeling like, all right, I've learned enough, I know that I want to make a move, it's important that you actually take that next step to discuss the details with us. So give us a call right now. We do have our account executives on standby waiting to help, and they can just get right into it. And then, of course, we'll send you a replay of the rest of the webinar so that you're not missing anything. And I do appreciate having you guys here with me, but I would rather have you talking with our account executives and just getting right into it for your specific situation. All right, but let's talk about the bond market here while I do have you. This is the big one, right? The bond market is underlying everything in the economy, and it's really the source of confidence in American exceptionalism. Both Ray Dalio and Jamie Dimon, the CEO of JP Morgan Chase, have warned that there is significant risks showing in the bond market, and investors really need to prepare for a major disaster here. Just in the last few weeks, Moody's, we talked about this, downgraded the US credit rating. We lost our last AAA rating. If you remember in 2023, Fitch downgraded us. Now Moody's is following suit. And this means that the safe haven status of the bond market and US Treasuries has been lost. And this has huge implications for the future of investing and the future of American exceptionalism, as I mentioned here. If you remember in April, we saw this crashing of the bond market, and it really shook people up because it's not something we see. When stocks are going down, bonds typically do very well, and that just isn't the case so far this year. That's likely just the first warning here. This is driving foreign investors away from investing in US assets in dollars and debt, and it means that investors are really no longer confident that the US will manage its finances responsibly over the long term. Typically, again, with short-term fears on stocks and general investments, you see this drop in long-term bond yields because money is flowing into bonds. People would move money into long-term stability. But what we actually see is the opposite happening right now, where the long-term bond yields are rising. And that means that investors are less willing to invest in the US over the long term because they see our debt as risky, not a safe haven guarantee of a repayment. Now, investors are really no longer confident, again, that the US will manage its finances responsibly over that long term. And so I want to really explain to you the bond market here, because this is the heart of it. So just to try and simplify all this for you, because it can get a little convoluted, the bond market is the lifeblood of any nation's economy. Every time the federal government runs a budget deficit, it fills that gap by auctioning bonds on the open market to investors. To entice investors to buy these bonds, the government offers a higher interest rate on those bonds. And so when doubts grow about the government's ability to repay that debt, the interest rates have to go even higher and higher. As that debt accumulates and the interest payments on that debt grow, the cost to the US government to service that debt is also going to grow, as does the risk that the government then won't be able to repay that. And so this sets off a dangerous chain reaction where interest payments compound into more future debt. That debt becomes riskier, and then interest payments must increase further to entice investors to take on that added risk. Right? This creates a scenario that we call a death spiral, or a doom loop, that really becomes inescapable. And some economists are now warning that this may lead the US into a full-blown economic crisis. And Ray Dalio, again, really paying attention to what's going on in bonds above anything else, says that we're going to have a supply and demand problem for the debt at the same time that we have all these other problems. And the results are going to be worse than a normal recession. And he says that the very value of money is at stake here. A breakdown in the bond market, combined with events like internal and international conflict, could be an even more severe shock to the US monetary system than when Richard Nixon took us off the gold standard in 1971, and also more severe than what we saw in 2008 with the great financial crisis. So that's a huge warning that we need to pay attention to here. Dalio also said that with Moody's downgrading the US credit, it doesn't take into account the risk of the federal government actually printing money to pay its debt, right? If we just put inflation on the table and print more money to pay that debt, the risk to US treasuries is even greater than what Moody's is saying, and the very reason they downgraded that debt in the first place. Bondholders would suffer losses due to the depreciating value of the money that they're getting paid. And that's important for you and I to realize, is that the government is inflating away our debt. They want a weaker dollar right now. So anything that we're holding on to that's valued in the dollar is losing purchasing power. That's why gold and silver is so important. And if we think things are bad right now, Ray Dalio says, just wait until the US can no longer find anyone willing to buy our debt. And that might actually be happening. The US had a treasury auction on May 21st, and we saw tremendously lousy show up in demand for those bonds. So this is kind of a major warning that's happening in the US system. And then furthermore, in April, China dumped US bonds, billions of dollars worth, and the Fed actually had to secretly buy up about $43.6 billion in bonds on their own in the span of a week. So the secret buying of bonds that's happening from the Fed is also spelling disaster. There's really no demand out there for our system. So again, all of this is an issue for the US dollar in the future, and it shows that the foreign appetite for US assets is really waning, and billions, if not trillions of dollars are beginning to move out of these traditional systems. The bond market, you guys, is a $30 trillion market. And Jamie Dimon says that we will see a crack in the bond market. We as a bank are preparing, and he's talking about JP Morgan Chase. He says, we're preparing, but a lot of people are going to lose a tremendous amount of money and get caught completely off guard. And really, this is a warning for us. Again, the dollar is losing value. Investors are losing confidence in the American system. And if even a small shift happens, it can cause huge damage to our portfolios. And this is why gold and silver are so important in this environment, because we need something, again, that's not tied to US dollars, that won't be negatively impacted by an implosion in the bond market or increasing government debt and devaluation of that dollar. And indeed, gold and silver are actually positively impacted by these things. And so if we're looking at the current situation, Traditionally, we're all on this side in stocks, bonds, equities, the dollar. We have to start pulling something away into the other side of the equation, especially as these incredible economists and analysts are warning us that this is unavoidable and it's happening. So I just want to commend you for having a sense of something is wrong in the economy. I need to make a change. And that's what we want to really shine the light on for you guys here. I think this is a good time to pause for just a minute, get into some of your questions, and kind of discuss some of the things that you guys are concerned about here. Benjamin says, is civil unrest good for gold? So two things here, Benjamin. When we have civil unrest here in the US, it's tremendously good for gold because foreign investors look into the stability of the US, which is really wrapping up all of our assets, and they see that we're in this volatile climate, that can impact companies, can impact investor sentiment, and they start pulling away from the US. And then even here at home, investors see civil unrest as an instability of the financial institutions and every institution in the US. And so US investors start pulling away from traditional investments as well, getting off the sidelines saying, I need to ride out this volatility. So civil unrest, just like in 2020, we saw that happen. It's incredibly good for gold and silver. Keith says, what is the cost of reselling your physical gold and silver? So Keith, I'll get into that again, but zero fees. When you want to sell your gold and silver back to American Hartford Gold, we will buy back with zero fees on that side. Everything that we do on our end is meant to make this as simple and as easy as possible for you, the investor, to get out of the dollar into precious metals, and then of course back into the dollar whenever you need to. We want a two-way marketplace for our clients, so you're never going to have to go looking for a place to sell, and you're never going to have these high fees associated with it. Max says, what is the grade of gold you sell? And do you have overseas offices given we are in Germany? If not, what are the delivery fees? Great question, Max. So as far as the grade of gold, everything comes from the major mints. It's completely pure for most assets. It's 4/9 pure or 3/9 pure, which means 99.9%. Some assets are actually 91.67, which is like your American Eagle or a Krugerrand. They have additional copper and silver added to them for more durability, but you're not losing any gold content. Something we probably can't get into a lot of detail with on this webinar, but if you call us, we can discuss in detail and help you get a better sense of what assets go into your portfolio. Now, American Hartford Gold does not ship overseas, but if you want to invest and you're in Germany, that doesn't mean you're excluded. There are ways that can probably help you. You can have your gold and silver stored here, or you can make arrangements to have it shipped. Again, call us right now and we can get into some details and options for you specifically on that, Max. I think that would be important. Is it too late to invest into gold with gold being at an all-time high? Look, gold is just getting started. We actually see this tremendous runway ahead of us for where gold and silver is headed, and all of the conditions that would cause gold to rise are only heightening at this stage of the game. And that's why we have analysts and investment banks calling for gold to go significantly higher than where we're at today. So I would tell you, if you're concerned with gold hitting these new all-time highs, number one, it's not at an all-time high adjusted for inflation yet with all the money printing we've done. So that should tell us there's a tremendous amount of movement, but also every voice that we hear out there saying we have significantly higher to go. Keith, do you offer vault storage for physical assets? We absolutely do. It's not our vaults, which is important. It's a third-party company, so there's checks and balances, and we can get you set up for your gold to be stored at a private depository, fully insured. You can also do this inside of an IRA where it would need to be stored at a private depository. Again, fully insured. It's very inexpensive to do so, and we can talk to you about those details. I'm gonna press pause here and just get into the midst of the rest of this. I just want to make sure that we're covering the ground that we need to, and I'll try and come back to some of the other questions that you guys might have here as well. Look, as far as the gold projection, this is really an important thing to touch on because, again, we're seeing gold at this new all-time high, and people are wondering, am I too late? Have I missed the boat? So with gold being brought up to record levels, it's really being driven by central bank buying. That's a number one reason that gold is growing right now, is central banks have been buying record amounts of gold. Now, Adam Glapinski he's the governor of the National Bank of Poland. He said that gold is the safest reserve asset out there. It's free from direct links to the economic policy of any country. It's resistant to crises, and it retains its real value in the long term. So do what central banks are doing and buy gold. Right now, that's quite the statement coming out of a central bank governor telling individual investors, buy gold, do what the banks are doing and buy gold. Now, when traditional markets are choppy, investors tend to move to gold. And we see that not only on the retail side, but institutional investors as well as big money. They're beginning to wake up and leave those traditional systems, and they're moving their money into gold. So this is a very good indicator that there's a lot more runway ahead as well. And the gold rally this year should give you the confidence that you're actually looking in the right direction. In just 2 weeks alone, we saw gold jump from $29.50 an ounce to about $3,400 an ounce. It's a good reminder that when global uncertainty strikes, gold remains that ultimate safe haven. And of course, we're going into a world where there's a lot more uncertainty. This year so far, gold is up about 30%. During the last bull run for gold, it wasn't uncommon for gold to do about 130% or so growth in a year. And so again, we're not even there yet. And a lot of investors are asking, how long will precious metals stay good? Look, this will be over when gold is widely owned by investors, when the budgets are balanced, when there's an outbreak of geopolitical stability, and really not any day soon, right? Gold bull run will not end until investor psychology changes and the mom and pop investor piles in. In reality, we're just now starting to see people wake up to this. So we're nowhere near gold being widely owned by any US investors or global investors on the retail side. Those mom and pop investors, it's just not an in-demand thing yet, but it's starting to be. So you are getting out ahead of this. Now, current retail demand is mainly driven by Asian investors, while the US and European investors are really nowhere to be seen. This is coming out of some of the major gold reports that, there's just this very tip of the iceberg on retail investors waking up to this. And really, global family office allocations, this is huge. Their allocations to gold and precious metals is just 2% of their portfolios. Market tops do not look like this. So if you're concerned that gold is at an all-time high and it's not going higher, we just don't see those fundamentals at play anywhere near yet. And Goldman Sachs actually sees gold going to $4,500 an ounce just this year. JP Morgan Chase and UBS say $4,700 an ounce on gold if things continue the way they are, again, this year. And you have to ask yourself, how bad is the economy and the market's going to get if these major investment banks, the most prestigious banks in the world, are predicting gold to break $4,500, $4,700 an ounce by the end of the year? That's why we want to protect ourselves, is if they're seeing this behind the scenes and making these extravagant calls for gold, how bad is our portfolio going to look by the end of the year if gold hits $4,500 an ounce? Make a move and get a hedge. And then also worth noting, this summer, gold becomes a tier one asset for banks, which means that they can store it at full value on their balance sheets. We haven't seen this before. So there's a shift happening. We're seeing banks really pile into gold over other assets. There's this fantastic runway ahead with plenty of factors that are bolstering gold in the future. And remember that central banks, again, are buying record amounts of gold right now, and they're doing that to prepare for a world where the US dollar is no longer the world's premier currency. That's something that you and I have to pay attention to. And then JP Morgan Chase also said they see gold at $6,000 an ounce if even a minuscule shift happens away from US assets. If just 0.5% of US assets held by foreign investors moves into gold away from the US dollar, we could see gold at $6,000 an ounce by the end of 2029. And typically they're a little conservative on these projections. The recent volatility that we're seeing has shown that the US is very vulnerable to capital outflows. So that's gold. What about silver? Now, silver is very interesting right now. Last week, silver hit a highest price in 13 years. And actually, today it's up again. Silver is facing a potential breakout year. It's surging with kind of unstoppable momentum that typically signals the beginning of a super cycle. Now, there's a ratio of 100-to-1 between gold and silver. So 100 ounces of silver equals 1 ounce of gold. This gold to silver ratio has only been this inexpensive compared to gold 2 other times in silver's history. Both of those times were prior bull markets for gold. Now, those rallies really reflect a broader shift towards hard assets, and everyday investors seek protection from inflation and economic uncertainty. And with silver already up about 20% since January, gold is up about 30% this year. Gold has been steadily climbing, and history shows us that silver tends to move later and then faster, right? So with gold moving, silver will rush to catch up. Now, there's booming industrial demand on silver, with solar panels really leading that way, but industrial uses account for more than half of the global silver demand. Far more than half of the global silver demand is just going into industry alone. There's 250 million ounces per year that's being used on the industrial side alone, more than what we're able to pull out of the ground. So there's this major deficit that's happened for 5 years in a row now. And that deficit is expected to grow and continue to grow as we go forward here, with some economists actually calling silver one of the best investments we can make over the next decade. Now, the current annual silver mining production is about 800 to 825 million ounces, but consumption on that silver has reached anywhere between 1.2 and 1.4 billion ounces. And again, so this huge deficit is on the table, and that deficit is growing as we go forward. Silver is not just a monetary metal, it's an industrial metal. It plays a very crucial role in the modern economy with solar, electric vehicles, 5G, aerospace, robotics, AI, and then just general industry and infrastructure as a whole. Now, silver is both, again, a monetary metal and an industrial lifeblood for all nations. According to the Silver Institute, demand outstripped supply by 15% last year, and this deficit is expected to continue. Silver is a defensive asset when investors are nervous about economic uncertainty. So, of course, that's on the table right now. And with market volatility persisting and inflation concerns lingering, more people are actually making room for silver and gold. Now, silver's current rally really presents opportunities and considerations for individual investors like you and I. At these elevated prices that we see, silver is actually finally getting recognition after years of lagging behind gold. And the industrial demand component gives silver this unique edge over gold, as it's both this safe haven investment and then this industrial growth play. So there's a lot of reasons for investors to be looking at silver. Just a couple more things to wrap up on this, because I really want to drive that point home that we see this amazing opportunity in silver that just has not existed before. GSC's head of trading, Phil Carr, says every major bull run in gold is followed by an even greater exponential surge in silver. We saw it in 2011, we saw it in the 1970s, and we're on the cusp now of seeing it again in 2025. Silver is still trading at just a fraction of its all-time high. In inflation-adjusted terms, silver would need to hit $75 an ounce to match its 1980 peak. We're nowhere near that. We're about half of that right now, and nearly $100 an ounce to rival the momentum of 2011. So there's a tremendous amount of growth that we should expect on the silver side. And again, analysts at GSC Commodities wrote silver is where gold was 2 years ago, deeply underowned and on the verge of explosive revaluation. And unlike gold, silver has scarcity, real-world utility, and embedded leverage that's in it. So from current levels, the upside is enormous. So I just want to drive that point home. There is so much growth left up ahead from every economist's perspective in both gold and silver, but silver may be the play right now in this current environment. So we've covered so much here, guys. Now I want to kind of wrap up into just how does it actually work to get into precious metals. At American Hartford, we have 2 ways that we can help you. One is through cash investing, and the other is through retirement accounts. If you have cash off the side, you're concerned about the value of the dollar, you want to get some risk off the table, you call us up. We'll go through a full consultation with you. You'll do a wire transfer or a check over to American Hartford Gold. Once we get those funds in, we'll go through that consultation again, help you select a portfolio of gold and silver, and we'll ship those precious metals right to your door. It's fully insured. We cover the shipping cost. There's no sales tax. It's incredibly simple and straightforward. And again, we do have that buyback commitment when you want to get out. On the IRA side, the majority of our clients have most of their net worth tied up in old 401ks and retirement accounts, and they want to get some risk off the table. I'm sure you're seeing the volatility that we've been talking about, And so to make a hedge in your retirement savings is so crucial. And what we do is we open up what's called a self-directed IRA. It's a quick application. It just takes us 5 minutes with you. We do it on the phone. We send it over to you for a signature. Our back office will help you do all the heavy lifting to roll your funds out of your retirement portfolio into the self-directed IRA. It's tax-free and penalty-free to move. And that self-directed IRA allows you to hold on to physical, tangible assets rather than just stocks, bonds, equities, and the dollar. So again, we'll build out a portfolio with you. We'll ship that gold and silver to a private depository. This is a third-party vault that's outside of the banking system. You own that gold and silver. You can access it any time you like, but it does have to be stored for you safely and securely while it's in that retirement structure to keep it tax-free and penalty-free. And again, it's fully insured. It's backed by Lloyd's of London up to $1 billion per account holder. And there's a couple of places where you can have it stored. And then you're going to have this nice hedge in your retirement account that's just invested on the other side of the market, not stocks, bonds, equities, and a failing dollar. So those are the ways that we help our clients. Now, if you are ready to get started, again, just give us a call right now, 866-607-2447. Our account executives will dig into the details on what that looks like for your specific scenario and help you get started to take those next steps. And then, of course, it's very important to understand why American Hartford Gold. There's a number of companies out there. Why would you go with us? Look, American Hartford Gold is the #1 gold dealer in the U.S. We've shipped billions of dollars worth of gold and silver around the country just in the last couple of years alone. We've been in business over a decade, servicing tens of thousands, hundreds of thousands of clients. We have thousands of positive reviews, A+ rating with the Better Business Bureau, and Inc. 5000 magazine, which you may be familiar with, is one of the most prestigious business publications in the world, has looked at American Hartford Gold and given us accolades, calling us the #1 gold company in the country. And they've given us those accolades the last 5 years in a row. So we really stand out. There's not going to be a better company than American Hartford Gold on pricing, on asset diversification, on client services. It's very important that we treat our clients right, that you have a great relationship with us, and that we're a full service firm. And so you have our personal guarantee that coming over to American Hartford Gold, you're going to feel more educated and you're going to walk away feeling very well taken care of. So do your own research on that. Call us, have that conversation. We'll get you a link to our reviews, to our accolades. You can see our CEO, our president. You can see the way that we've carved out this space in the industry to really be the leader in precious metals. And if you're going to make a move with your life savings, of course you want to go with the name brand in gold and silver. And that is unequivocally American Hartford Gold. You're going to be in very good hands coming with us, and we'd love to help you out here. Now, we do have a promotion. This is what I wanted to talk with you about as well, of free silver. So for every $50,000 that you invest into gold and silver, right now we have a promotion that we're going to give you $500 of free silver. So it's 1% of your order back in free silver up to $15,000. So, portfolio of $1 million, we're going to get you $10,000, $1.5 million, $15,000 of free silver. But whatever level you feel comfortable investing, we want to have those promotions with you. Our minimum start at just $5,000 on the cash side or $10,000 on the IRA side. So whatever you have that you're looking to protect, it's important you just make a move and get something into precious metals right now. And we want to make that as easy as possible for you. Okay. Last couple of questions here. Benjamin says, can I purchase any type of coins or bars with my 401k funds, or only specific types? There are some restrictions. And Benjamin, you don't have to be a precious metals expert to get into gold and silver. You're leaning on American Hartford Gold to do that. Again, we put together billions of dollars of portfolios for our clients. We do that while giving you an education, but you're really leaning on our expertise. We'll talk to you about the restrictions, about the different assets that can or cannot be put into a retirement account, and then what's really probably best for your situation here. And of course, we would never expect you to become a precious metals expert overnight, but we do want to at least give you a good lay of the land and a good education as you go through that process. And then Krista says, we have an inherited annuity. Can that roll over into a gold IRA? Yeah, Krista, absolutely can. It's very simple. Again, it's tax-free and penalty-free to do it. And I'd really recommend that you call us right now and just talk to one of our account executives. They'll get you on with one of our directors, and they'll talk to you about how that's possible. And then Marco says, sorry, missed about how long you guys have been in the business. 10 years, Marco. We just celebrated a decade in business. And again, leading the industry as the #1 gold company in America. What are the odds that for some reason or unexpected reason you go bankrupt? Look, here's the thing. That's not going to happen. We're the only company in the industry backed by private equity. So we have great liquidity for our clients. We have great stability. We're doing, again, billions of dollars of gold and silver. But if we go away, that doesn't affect you at all. We're not holding on to your gold and silver. You are, or a private depository is. So there's no liability that ties you up with American Hartford. But of course, we want to be around to service you, to buy back. If we're not here to buy back, you can take your gold and silver anywhere you want to, any dealer, any broker. They'll be happy to purchase your gold and silver. It's desired around the world. So you're not tied up in American Hartford and our financial stability. But the good news is we're the most stable company in the industry. We will be here for decades to come. All right, now I want to just give you guys a wrap up here. We've been going almost an hour. I want to be respectful of your time and let you talk with our advisors here, or our account executives, excuse me. The last 12 months, gold is up 48%. Silver's up about 30%. The S&P 500 is up 4%. The NASDAQ's up 6%. But even since 2000, gold is up over 1,050%. Silver's up about 428%. The S&P 500 is up 244%. And the NASDAQ is up 366%. And so you have to ask yourself, where do you want to be? Gold is outperforming stocks, both in the short term and the long term. And we really don't typically see that. We're not used to looking at gold and silver as the best investment out there. But if we zoom out, it's been doing incredibly well and looks like it will continue to far outperform the stock market in the coming years. So where do you want to be positioned? Is it stocks and the dollar, or is it gold and silver? Wise investing is about risk management, right? Identifying the risk and making moves accordingly. Gold is outperforming the markets, far outpacing it, and there seems to be nothing but risk and uncertainty on the horizon as we go into the next couple of years here. Gold is up $700 an ounce in 3 months. It's about 26%. Why is that? The dollar is plummeting. We're moving into recession. Countries are moving out of US bonds and into gold. So follow the countries, follow the banks, and get into precious metals. Now, Nitesh Shah, he's a commodity strategist at WisdomTree, says gold is clearly seen as the favored safe haven asset in a world upended by Trump's trade war. The US dollar has depreciated, and US treasuries are selling off hard as faith in the US as a reliable trading partner has diminished. Ray Dalio again says, if you think the current outlook is bad, just wait until the White House can't find anyone to buy its debt. So as we add to our government debt, as the dollar devalues, as the government and countries walk away from the US dollar, how bad will things get here at home in our portfolios? Consumer debt is at an all-time high. Household debt is at an all-time high. Credit card debt is at an all-time high. Car repossessions are at an all-time high since 2008. Global debt is at an all-time high. The US debt is at an all-time high. Fiscal deficits are at an all-time high. Nothing about this spells stability for our country or the globe, and all of that money is looking for safer places to be. So with all of this going on, what do you think is the safest place to be? Doesn't it make sense to just get an account opened with American Hartford Gold so you have somewhere to run when we move into the second inning, when the economy starts to shake up even more dramatically than what we've seen? Central banks, billionaires, and history are telling us that gold is the place to be right now. The bond markets, the equity market, and currency markets are far too volatile for our retirement accounts. And so again, I just pose that question to you. Where do you want to be? And doesn't it make sense to just get an account opened up no matter what amount you're starting with and get some risk off the table and hedge to diversify? Now, America imported more than 600 tons of gold in the first 2 months of 2025. Central banks bought more than 1,062 tons last year alone. And banks haven't moved this much money and this aggressively into gold since the 1950s. So what's going on behind the scenes here? Remember that President Trump tweeted earlier this year, the golden rule: he who has the gold makes the rules. Treasury Secretary Scott Bessent came out and he said, gold is my number one holding in my portfolio. I think that every American should have it. Investment banks are saying, do what central banks are doing, buy gold. And so if the policymakers are dropping these hints, it's probably something that you and I should pay attention to. And then I'm going to read you this last quote here. For investors, the message is simple and stark. Keep your eyes on gold. It hasn't climbed in prices because it's pretty. It's climbing because a lot of smart, powerful people sense that the ground is shifting. Portfolios filled with nothing but tech stocks, bonds, and vague promises might feel as empty as a campaign pledge the morning after Election Day. That's pretty dramatic. That's something, again, that we want to pay attention to. What is in our portfolios and where is that headed? And so, look, if you feel like it's time to change, and that's why you're here, go with your gut. Get some kind of hedge. There's never been a better time than right now to make that move into physical gold and silver. And I hope that I've been able to enlighten you people, help you get a good sense of what's going on, why gold and silver, why American Hartford Gold, and then what we're expecting as we go ahead. So I want to thank you for joining me. And as I wrap up this webinar, call us now. Again, it's so important that you actually take that next step. You've gotten educated here, hopefully a little bit. Your gut is telling you it's time to do something. But unless you actually pick up the phone and make that call, you're going to find yourself 6 months from now with the same problems, the same volatile portfolio, and the same concerns keeping you up at night. So call us now, 866-607-2447, and we're just going to discuss those next steps in getting you started. I want to thank you for joining us here today. I'm Machi Block with American Hartford Gold. Give us a call. Let's talk about how adding physical precious metals into your portfolio can give you that specific hedge that you're looking for, help you sleep easier at night, and give you the confidence that you need.